I've bought them quarter after quarter. Some of the buys were terrific. Some of them were at such good times. And I don't know when to buy stocks, but I know whether to buy stocks.
In today's video, world's most successful stock market investor and CEO of Berkshire Hathaway Warren Buffett tells us about his stocks investments. Buffett shares his opinion about Apple and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
The S&P, the Russell, and the NASDAQ, the Dow's not far off. And the question we always ask you is, do stocks look expensive to you at these prices?
Well, they are definitely. If you had your choice between buying and holding a 30-year bond for 30 years or holding a basket of American stocks, there's just no question you're going to do better holding stocks. So it's more attractive considerably more attractive than fixed income securities. That doesn't mean they're going to go up or down tomorrow or next week or next year. But over time, a bunch of businesses that are earning high returns on capital are going to beat a bond that's fixed at roughly 3% for 30 years. And it's not my field of specialty, but actually they look stocks generally, which are their businesses, they're American businesses, 30 trillion worth of them, and they look cheaper than generally real estate.
Is that the only thing that makes stocks look attractive right now, is the comparison with fixed income?
Well, that's what you have to do in investing. I mean, you're sitting with some cash in your pocket, you've had savings, and the question is, what do you do with it? You can buy a duplex next door and rent it out to people and do fine over time, or you can buy a small piece of farmland or something of the sort, or you can put it into something fixed income, bonds or bank deposits or whatever it may be. And stocks, if you look at American equities, American businesses earning a lot of money relative to the capital put in. And the reason stocks are worth a whole lot more than they were 20 years ago or 50 years ago or 100 years ago is companies have plowed back part of the earnings. With a bond, you get it all out in interest. You get your 3% or whatever it is, and that's what you have. With stocks, you get maybe a 3% dividend, but they're plowing money back, or they're repurchasing shares or doing something. And over time, that just makes a huge difference.
The last time we talked to you, you said you were still buying stocks. Are you still right now?
We're buying stocks this morning, and I'd rather buy them cheaper, but I've been buying stocks since March 11th, 1942. And I bought them under every president, 7 Republicans, 7 Democrats. I've bought them quarter after quarter. Some of the buys were terrific. Some of them were at such good times. And I don't know when to buy stocks, but I know whether to buy stocks. And assuming you're going to hold them, wouldn't you rather own an interest in a variety of great businesses than have a piece of paper that's going to pay you 3% in 30 years, or a short-term deposit that pays you maybe 2% or something of the sort?
You own 5% of the shares outstanding of Apple. It's the biggest holding for Berkshire Hathaway at $56 billion. Have you continued to buy even since that filing?
We bought just a little. About 6 million of the shares are attributable to another fellow in the office that's owned it for a considerable period of time. The rest are my portfolio, but I bought just a little bit. I like to buy them cheaper. I mean, it's very difficult. I started buying when the stock was maybe 100. I was buying it kind of as fast as I could, and then I ended up buying some as high, a whole lot higher. I wouldn't name the exact price, but a whole lot higher. I'd rather have it go down. For one thing, if it goes down, Apple's going to buy a lot of stock back. They're already buying stock back, and if it goes down 10%. It means they get to buy 10% more shares, and my interest will go up 10% more for spending that money in buying shares. So I am benefited by going down. If I were to talk my book, I would talk it down. I like to see the new release do well, or that. But I do not focus on the sales in the next quarter or the next year. I focus on they won't tell you exactly how many, but hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, that is some of the most valuable real estate in the world. I mean, that is Fifth Avenue will never come close to that. I mean, it is. You've got hundreds and hundreds of millions of people with loads of buying power and able to do business or learn information or whatever it may be, and it's part of their habit of living. I mean, they spend hours a day, and it does all kinds of things for them. So that real estate is worth a fortune, and it's nice to have it added to as they sell new phones, and of course a lot of them are replacement phones. But they're adding to hundreds and hundreds of millions of consumers that are never going to get to Fifth Avenue, or they're never, and you are an indispensable part of their lives. I mean, it's an extraordinary product.
So you don't even look at it like a tech analyst would, or like a tech company for that matter?
I look at iPad. Oh, you mean
just in terms of how you value this stock?
Oh,
It's consumer products.
They've got to keep having the product that this huge clientele regards as indispensable. So it's got to be the best thing that they can tell us to when airplanes will arrive, or whatever it may be, what the weather will be, what stocks are doing, a million play games, whatever it may be. And that's important that their replacement products are looked at as super desirable. But one of the things that I grew to understand was we have a very large retailing operation, the Nebraska Furniture Mart. And if people went in to buy the latest iPhone or whatever it might be, if for some reason we didn't have it, you couldn't sell them anything else. They either went next door, which we didn't want them to do, or they came back. But I mean, it wasn't an alternative. And when you have a product that is that personal, that valuable, and they talked about the iPhone 10 costing $1,000, and that a lot of money. I have a plane that costs me a lot, maybe $1 million a year or something of the sort. If I used the iPhone, I use an iPad a lot. If I use the iPhone like all my friends do, I would rather give up the plane, which is $1 million or $1.5 million a year, for something that costs $1,000. I mean, the iPhone is enormously underpriced. Now it's got competition, so you can't push the price. But in terms of its utility to people and what they get for $1,000 someplace else, you're going to have a dinner party that costs that. And here this is, and what it does for you, it's incredible.
You mentioned airplanes and airlines, and I just wonder, are the airline stocks that you also still find attractive? Have you been adding to your positions there?
Well, we can't add. I mean, technically we could, but I don't want to go above 10%, except in rare circumstances of the security. So we own 9.5% of the four largest, and I actually have to trim them just a little if they're repurchasing shares to stay under 10%. If I could buy 20%, I would have been happy to buy 20%. But so we've got about what we can handle.
A long time you've said that if it got above 120% of book value, you would buy it back. That created a floor for the stock. Now you say that you're throwing that out the window. Right. If you and Charlie look at it, and you and Charlie Munger and agree on it and think it's worth it, you'll buy back stock. Have you bought back any stock since then?
We've bought back a little, yeah. And we tie it now to intrinsic business value, which we should have done all along, but for a while, book value was a good proxy. It didn't fully describe intrinsic value, but it tracked it, and it was a reasonable proxy. And it's gotten to have less and less importance as we move to operating businesses from investments. So what really counts is what are the businesses worth, along with the securities we own, and if it's at a discount to that figure, Charlie and I will buy, and we bought some.
How often do you and Charlie talk about it?
Well, we don't have to talk very often because if it's so close we have to talk every time it moves 1%, it isn't worth buying. I mean, so there should be a margin of error in our calculation. So we never talk day to day or week to week on it. But I know that what's in his mind, I know what's in my mind. We're totally in sync, and we need a big enough discount so we're buying it at what we know is a price where the continuing shareholders are going to be better off because we bought it. We're running business for the people who are going to stay, not the ones who are going to leave. The economy, really since the fall of 2009, has progressively gotten better, but it started from a very low base. It started from panic. And we've now had 9 Well, very soon. We've had 9 full years of improvement in business. I mean, quarter by quarter. Now, sometimes it looks like 1% or 1.25%. Sometimes it's 2.5%. Now it looks even better than that. But business is good. Across the board, business is good. It was good 2 years ago, but it keeps getting better. But the American public household wealth is over $100 trillion. And 250 years ago, this island where nothing was worth, there wasn't anything here. I mean, $24 per Peter Minuet.
One issue that people have worried about is what's happening with trade and tariffs. Have you seen any impact on Berkshire's businesses or higher costs associated with any tariffs that have gone into place?
Yeah, there are a few, definitely. And we buy steel, for example. I mean, at MyTech, or we buy it at a lot of places. And we are seeing some effects from that, and we're seeing some effects from inflation.
I'm sorry, from inflation.
We've seen more in the way of cost increases in the last year, if you go across all of our businesses, but particularly building materials, or we sell paint. I mean, the can it comes in, that is a lot more expensive than it was a year ago.
How much of the inflation is directly tied to the tariffs, and how much is just from an improving economy and inflation you would expect to creep in?
Yeah. It pops up in different places. I haven't really done that, but I was seeing it in raw materials well before the tariff situation came up. But the tariff situation will aggravate it significantly. I think Jay Powell is a terrific chairman of the Fed. I've known him well, but I've known him. I know people he worked with, and I've listened to what he's had to say. So I love the fact Jay Powell is chairman of the Fed, and he will do the right thing. As he gets a lot more figures in than I do. I may get him a little faster on some things than the Fed. They may work their way through, but he will see it, and he'll do what, in his judgment, is best for the American economy over time. There's no question about that. And maybe he'll make mistakes. I know I'll make mistakes, but he knows what his job is, and he'll do it.